rates this week, how will that affect your real estate portfolio? That is what we're talking about today in my latest Never Lose a Deal podcast. My name is Lorillia and I am your host. And here is a podcast for real estate investors who creatively want to scale and expand their portfolio using different forms of financing. So let's get into today's topic. As I film this podcast episode, it is now October 31st, 2025. And as of this week, Jerome Powell has did a interest rate cut by 25 basis points. Now, my question to you, Mr. or Mrs. Real Estate Investor, how will that affect your upcoming plans for real estate? We are currently in a market, depending on your level of experience, where some people are attracting, some people are contracting as well, and some people are expanding. Which one are you? Today's topic, I titled it is how to make money in with the recent interest rate cut. And that is what I want to talk about, because even with some people reacting, some people contracting, and some people expanding, one thing that I know is that interest rate sensitivity is mostly affects people who are new to real estate. So, what I'm finding is that the conversations that I have with people are just people in the industry is literally on the residential side. Many real estate agents may have just got introduced to real estate in 2020 when interest rates were at the very low, I mean, what were they? 2%, the highest was 3%. And it was very easy to be a real estate agent, maybe even a mortgage professional when interest rates were low. Because on the consumer side, which is the residential side, consumers feel comfortable knowing that although the price of what they're buying may be X, they have been conditioned to look at the interest rate. That's why, on the residential side, you'll have people who want to buy down their interest rate. And the list goes on and on. But on the investor side, on the commercial side, interest rate sensitivity is really not something that experienced investors are really concerned about. And the reason why, and that is what I'm going to talk about today, because that is why I said how to make money with the recent interest rate cuts. Because if you are an investor who is looking to expand or scale your portfolio, you are at a place in your journey or career as a real estate professional where you are not new to what it is that you are doing. You have had proven success with what it is you do. Maybe you are a mobile home investor and you know it works and you are looking to scale and buy more mobile homes. Maybe you are a multifamily investor and you know it works. You have it down to a science and you're looking to expand your real estate portfolio to buy more. Or maybe you are an investor who buys duplexes or triplexes and you know that business model works and has worked for you and is proven and you want to expand that. That is the investor who knows what they are doing works. And I just want to add this. They've also possibly been through some economic cycles. What do I mean by that? They're not new to real estate. They haven't just um got involved in real estate in 2020, because nine times out of 10, that investor who just got started in 2020 really hasn't really seen any real volatility. All they've seen is really a upward an upward trend of real estate, and now they are seeing that an upward trend has somewhat is really not in the same place. But that investor who has been through a few things, maybe even similar to myself, maybe have been around since 2008 and they have been through some ups and downs or what have you, those investors really have a goal in mind. And the reason why I say interest rates don't matter when it comes to how much money you want to make in real estate, because for the investor who is looking to expand or scale their portfolio, there are other things that they are taking into account. Interest rates are the smallest thing that is part of that equation, because a lot of investors, if their goal, now the goal can be many things. There's 100 ways to skin a cat. Only the investor, meaning yourself as the investor, would know what is your goal. Like, are you looking to scale or expand your portfolio for cash flow? Are you looking to do it for tax um, um, for tax reasons? Are you looking for it to create some type of wealth plan for you or your family? Or are you just doing it because maybe you want to eventually replace your job? And if that's the case, only you would know when you put that plan in place, are you in line with achieving that goal? Interest rates just play a very small part. And the reason why, this is why I like asset-based lending, because asset-based lending allows you to buy or purchase or invest in an asset where the income from the asset should exceed the expenses that is being generated from the asset. And if you're able to do that, and the interest rate, whether it's 5%, I'm seeing with some DSCR loans, there are lenders that I'm working with are at the low fives. So whether you're at 5 or maybe you are at 6%, or maybe like a year ago you may have even been at 7, at the end of the day, is the plan that you've put in place for that expansion that you're looking to do for your real estate portfolio still in line? I always say newbie people chase interest rates. Experienced professionals, interest rates play a very small part because they are more so concerned with the goal that they have for the long term. And so, as long as it fits in their scheme of what it is that they're doing, and only you would know, then there is a win. Interest rates play a little part of it. So that's why I tell people that if you're interest rate sensitive, there's nothing wrong with that, but then you should not be saying you're looking to expand or scale your portfolio. You may still be in the house hacking stage, and it's nothing wrong with that. But recognize the stage that you are in. Don't let, this is not the market to let people convince you that you need to be doing something that you may not want to do. It is very easy to buy into a lot of these things on the internet. Scaling and expanding a real estate portfolio could be one, but let me share this with you. Many investors are really not at that point yet. They're not. And so don't let people convince you that you are. You may still be at that house hacking stage, and there's nothing wrong with that, especially if you are at the place where interest rates are still sensitive. But if you are that investor who says, you know what, Lorillia, I've been doing this for a while, I know it works, it does work, I am going to build out my portfolio. I have a 5 to 10 year plan, whatever that plan may be, and I am going to follow suit to be able to do it. And financing is going to be a piece of it. I tell people all the time, it is very difficult to scale your real estate portfolio without leveraging financing. That's why when I hear people who just use terminology loosely here on the internet and say, oh, I'm going to help you scale your real estate portfolio with just cash, who would do that in this market? Who would do that? Who would literally risk all their liquidity to try to scale and expand a real estate portfolio using all their cash? Ladies and gentlemen, we got to be wise. This is not the market to get to jump on top of trends. This is the type of market where you want to be very certain what it is that you want to do. I just recently wrote a post on one of my social media platforms, and I said that for myself, 2008, 2020 were the best of times when it came to real estate for myself. I have learned that during times of volatility is the best time to get the best deals. Because most people, those who are inexperienced and don't have a lot of experience, they're sitting on the sidelines. They're still looking for time periods to be similar to what they saw. So those investors who may have jumped on into real estate in 2020, they themselves are looking for things to mirror what it is in 2020, and now it being 2025 and into 2026. There's a lot of unrest going on in this country. So there are a lot of factors that play a part in the whole scheme of what it is that you want to do. And a lot of people let those things affect them. So that's why I tell people, now more than ever, you want to make sure that you are very grounded with what it is that you want to do. Like I said, if interest rate sensitivity is something that still bothers you, and it irritates you, be okay with being in the season that you are in. You may still be in the house hacking season, but expanding and scaling, that is something totally different. Interest rates don't really play a large part, because if an investor is looking at asset-based lending, there are other factors that play a part in it. And if the revenues exceed the expenses of the if the revenue exceeds the expenses of what the asset is bringing in, it can still be a win. And so investors who are looking to expand and scale are looking for that. So that is really all that I have for you today. Um, as always, if you have a real estate scenario that you want to discuss when it comes to expanding and scaling your portfolio and want to know what financing is the best solution for you, right here on this screen, for those who are watching on YouTube and Spotify, all other platforms, you'll be listening to me auditory, but just go to www.leverageportfoliocapital.com to learn more about how you can find out what is the best funding solution for you. Also, my upcoming for the month of November, like I said, as I film this, it is October 31st. So for the month of November, I will be doing, I did one last month, well, actually this month, 2 weeks ago, did my monthly webinar, how to scale and expand your portfolio using business credit cards and creative financing to expand your portfolio. Last month, which is this month, I'm thinking we're still in November, but literally a few weeks ago, I talked all about frameworks. I talked about how the framework I teach is work, and how it has gotten my clients results, because everything that I do is based on a framework. And so next month is more into the scaling component and how you can literally structure your portfolio to be able to scale in the different leveraging, um, funding and financing tools that are out there to be able to help you to scale. And that I will be doing in 2 weeks in November. And to learn more about that, just go to www.neverloseadeal.com. But until the next time, let's see what this economy is going to do. Maybe Jerome Powell may do another interest rate cut, but doesn't matter, because this is what I know: experienced investors can still be able to win in any type of interest rate environment. Until the next time, see you in the next video. Bye bye.